Hello, welcome to FountainFX on Tuesday the 11th of February 2014. We're looking at the Euro US dollar again. In this instance we're looking at the 1 hour chart. Often if you don't really see trade opportunities, change your time frame. Go from the large time frame down to the smaller time frame and back up again, just to get a good glimpse and good understanding of what's happening. Anyway, if we give you a summary of what happened yesterday, we can see that this is where price was sort of flat in the middle of the screen. I'll highlight it just very quickly with a circle so you can see. This area was the Asian market yesterday morning, very flat, nothing happening. Then immediately after it, just after 8 o'clock our time, 6 o'clock European time, that was the European Open. Price pushed up from this area of around about the 136.20, pushed all the way up to the 136.45, and that was basically the European Open push. Turned and came all the way back down. So Europeans like to also reverse their movements as well. Don't want the Americans to gain any profit from it. Always cautious about the Americans doing the reversal first. But look, so it came back all the way back down into the area where price pushed up from. And as you can see, where the actual wick, the bottom of the wick is, really is where the first bullish candlestick started to form. So it came all the way back down. What did it do then? Continued in its way up. Okay, you can see it's an upward trend. So really the thing is to improve on your trading is just trade in the direction of the trend. Don't trade against the trend. Okay, against the trend, market price doesn't really move very much unless it's a trend reversal. And the thing is, just look for the pullbacks and the trend. Having bought here, price went up, came back down to it, didn't break below it. Confirmation that it's still an uptrend. Pushes up, comes back down. So yesterday there wasn't really a lot of activity. Price turned at this point, I assume, let's have a look, 2 o'clock, yeah. The US sort of came back into the market around this time and pushed the price all the way back up. So we had a 20 point move up, 20 point move down, 20 point move up. And that was really the activity for yesterday. Not a lot. If we were looking at it from more of a swing trade perspective, it's great because you look at your buy order, placing your buy order in here, and you just leave it to run. Put yourself a stop below this area of consolidation, somewhere down here, to protect your money, and just let the market do as it wants to do. And so what we can do is, if we want to continue to manage this, is just basically stick a trend line across here, and if you really want to, you can put a trend line across the top, but I'm not going to. So that's your area of support, and you can run your trading stop along the bottom of that. Now, if you're not in this trade, what can you do? Well, look for areas of pullback. If you look here at the 136.46 across the top, we've got resistance, 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 finally broken through. So this is an area where you could say, guess what? It's probable that it's going to become support. So I've put in a buy order here at 136.46 with a view that when price pulls down to it just before the European Open happens, or it may pull down with the European Open, sometimes you'll see momentum coming down to a level just for it to turn and then continue up with that momentum. So placed a buy order there. I've looked at the area. If you look at all this movement, etc., I'm happy with a 20 point stop, so I've placed my stop below this mark here, and we'll see what happens. We'll see if price picks up and it continues in the uptrend. Let's have a quick look at news to see if there's anything likely to stop the trade. And looking at the news in terms of economic news, there's not until 5 o'clock today, end of the day, is there going to be any information coming out from the US. So looking at news that's out there, it's talking about the market watching for clues from the Yellen testimony. Yellen is the federal chairwoman in America. Obviously they pull up very complimentary pictures of her. But if we go into that and we have a quick look at what some of the things they're saying, and the biggest thing that's come from this is that they're talking about concerns over her reducing the quantitative easing, i.e. the printing of money and then the issuing of bonds to pay for it. So they're talking here, if it says the Fed has reduced monthly bond buying by $10 billion at each of its last two meetings, cutting purchases to $65 billion. So that's every month, by the way. In several speeches last week, the federal officials said the hurdle for pausing the tapering is pretty high. Okay? So it's likely that that should remain, but it says if Yellen wanted to move the markets, as in the value of the dollar, the one thing she could say is that she's going to ease tapering. So she's going to reduce the amount of tapering, or she's going to increase the amount of tapering, whichever way. The point is that it says is if the data, if they come out with this data, the jobs data, and they say that it actually has got nothing to do with the cold weather that they had in December, January time, then therefore, as it says here, it will be bearish. At the very bottom it says the results would be bearish. In other words, if the data is true and it's got nothing to do with seasonal adjustments in terms of weather conditions and so on, which we'll see probably in the next month or so, but it's if she comes out and says that the data has got nothing to do with the weather, then that will have a bearish reaction on the dollar, which means the dollar value will go down. So it's looking at that kind of information. So keep with the long on the euro at the moment. The dollar seems to be having quite a bit of negative news coming out, but also keep a closer eye on the news, and happy trading.